Ladies and gentlemen, in a financial market, it is predictability that makes you money, and predictability comes from observable trends. The biggest trend on Bitcoin is the 4-year cycle, but as we push up to 49K and threaten to break out above that level, is there a possibility that the 4-year cycle could be invalidated? And is there a possibility that this cycle could be different to the other ones? We need to look into this today. We need to look into the damage that could be done if we break 49K and look into how serious it may be. Is Bitcoin facing permanent damage, or is Bitcoin still in the clear? Ladies and gentlemen, let's get into it. Before we get into it today, check out the BitGet and BingX exchanges. If you need an exchange to buy and sell cryptocurrency on, you can check out BingX, it's global non-KYC. BitGet is global KYC minus the USA. Both of these exchanges have my referral links down below for discounts and rewards. The Crypto Academy will teach you how to trade if you want to learn in a course format similar to a university style format. This is the place you can learn. That link is in the description below. And finally, if you want to trade altcoins on Telegram with me, you can do so in my VIP group. You can check out the link below. It brings you to a group chat that shows you kind of the payment information, what you get for the course, and also finally the PDF document with the trading results. Okay guys, without further ado, let's get into the content today. Today we are answering the question, will Bitcoin suffer permanent damage from a move to the upside? Now, first and foremost, I want to format this video by very clearly looking into the short term and coming to the conclusion that a move to the upside is not guaranteed by any means. Look, okay, daily chart will start out. We'll go into hourly chart in a second. And the daily chart we've got right now is Bitcoin testing a major resistance zone. And we're testing a major resistance zone with very bullish breaks. We got a bullish break out of the bullish pennant formation I just circled in yellow. Let's go ahead and delete that for the time being. We also had a breakout of a 4.5 month long descending RSI resistance line. That was great to see. And that one's actually over here, stemming from December 5th. So it was actually more like 2.5 months long, I should say. But we broke that to the upside. We've moved upwards rapidly since then. It lined up with the bullish pennant formation breakout. And we've also broken out now, just yesterday, another RSI descending resistance line. So we have this descending resistance on the RSI stemming from October, which is 3 months ago now, essentially 4 months ago, close to 4 months ago. And we had multiple retests in that line, and we broke it for resistance. We're come up right above it now. We're coming down. We're testing it for support. We could see a bounce off of it, which would lead to a further move to the upside for Bitcoin. There's a lot of bullish factors on the short-term Bitcoin chart right now, including the bounce from 38.5K alone. I mean, that was a very strong bounce. One single wick touched the support zone exactly, flipped that support zone, zoomed to the upside. So there certainly are a lot of bullish factors on the Bitcoin short term. But it is important to note that it's not all bullish yet, because we are right now at major macro resistance. Okay, if we zoom out, we can see this red box stems all the way back from the dead cat bounce in the 2022 bear market. It's where we topped out at around 48K to 49K. That's where we topped out right there. In fact, we topped out at 48.2K. So right now we're at major macro resistance. In fact, probably the strongest resistance zone we faced since breaking above 32K, which was of course, the resistance zone that we struggled with for a long period of time throughout 2023. When we finally got above that zone, that's this one here I'm referring to, we obviously moved to the upside rapidly. We saw another leg to this move to the upside. Obviously the first leg being, from 15K to 28K or 30K, and now the second leg being from 30K all the way upwards here to 49K. We're currently at the top of the second leg. We're at major macro resistance, and of course, it's kind of irrational. In fact, it's basically TA 101 to not be bullish going into resistance and to not be bearish going into support. So although we do have many, many good signs for Bitcoin right now, the fact of the matter is we're at major macro resistance. You can't really be taking longs or anything like that into major macro resistance. That's just basically the stupidest thing you could do. It really is the first thing you learn about trading. Do not long into resistance. Do not short into support. These are basic concepts. So although Bitcoin does have all these good signs, it also does have the reality that we are at resistance. Resistance generally leads to rejections, is not the place to long. We also have the reality that right now we could be forming a double top formation. And we also have the reality right now that we're not actually in an upwards trend quite, really, to be honest, in a medium-term scale at all. In fact, we had an upwards trend here from September. We moved upwards. We had high highs, high lows. We had our higher low over here at 40K. We broke it to the downside. This could be a retest of the high or even potentially a lower high because we haven't actually touched 49K yet, but more likely a retest of the high. So right now, again, to kind of, show you what's going on short and medium term, Bitcoin has seen some bullish signs, a lot of bullish signs. It has shown massive strength, but quite frankly, we haven't really confirmed anything yet on a macro scale because we haven't broken the macro resistance. We also have the hourly chart showing us a kind of ascending, broadening wedge formation in pink. So that's something to worry about as well as we head towards this resistance. But overall, we have seen multiple good signs. Another good sign we've seen is the weekly chart. The weekly chart is undeniably bullish at this point. We saw multiple rejections from 43.8K, really, 5 or 6 of them. A candle close rejection, a separate candle close rejection, a wick rejection, another one over here, 5 or 6 rejections across the course of a couple of months. And we've now seen a massively bullish candle just skyrocketing to the upside. One of the biggest green candles in terms of price that we've seen, I think, all the way since back here in March 2023, maybe even more than that. So, it's undeniable that Bitcoin's showing a very much large amount of strength here, and we definitely need to consider the bullish case. But the problem is, unfortunately, that it's not as simple as looking at short-term and medium-term TA in this price range, and this is why it's so complicated to give direct answers, because we have the macro trends to consider as well. Now, I want to break this down for you. I've broken it down in the last 2 videos. I'm going to break it down again today, because the overall point of this video is basically asking the question, will Bitcoin endure cyclical damage by breaking to the upside here? And for someone who's not educated on the 4-year cycle, you might think that's a ridiculous thing to say. Why would we endure cyclical damage? People are just bullish before the halving. It's completely rational and normal. Well, the problem is there are micro trends within the larger 4-year cycle that need to be maintained in order to guarantee and secure the validity of the other micro trends, which are fundamental to bringing us to estimations on when Bitcoin will top, and things like what price Bitcoin will top at. Let's look at the 4-year cycle as a whole before we even get into this macro trend on the monthly chart. If we're looking at this chart here, this is an analysis of the 4-year cycle looking into all of its micro trends. You can see in the writing here, we have 5 separate micro trends, trends that have 2 to 3 data points, ranging from top to top on Bitcoin price action into cycle, bottom to bottom, top to bottom, bottom to top, bottom to halving. All these micro trends connect to one each other and add validity to other parts of the cycle and other micro trends in order to bring us to very concrete data about where Bitcoin will top out, where it will bottom out, when it will top out, when it will bottom out, I should say. And it's worked perfectly. It's worked perfectly ever since the first halving in 2012. And more specifically, if you want evidence of the 4-year cycle working in practice, you can look at 2021. We topped out perfectly as per the 4-year cycle, as predicted on this YouTube channel in November 2021. And following that up, we topped out absolutely perfectly as per the 4-year cycle's date range trends in 2022 in November. This has been, seeing 2 separate perfect data points in the time I've run this YouTube channel, which it really just surpasses the point of it being a coincidence or luck or a fluke. For this to be a fluke with all of these data points, with all these micro trends, it would be less than 0.1%, chance. So this is absolutely, objectively a definitive trend for Bitcoin. And it's not a trend that we can just label down to one specific micro trend. Again, it spans across many micro trends that are all connected to the same narrative. The narrative being the halving leads to a bull market. The bull market lasts about 1.5 years. And after that, we see a bear market. And all of this happens within about a 4-year period. It's a 4-year cycle for a reason, right? So now that we know it's an all-encompassing trend, really, like a lot of micro trends that stem cycle to cycle are part of the 4-year cycle, we can look into the trend we have now, which is very important in relation to 49K. And we can look at this right now. I'll tell you about it. I'll show you what it is. What we have right now is a measurement line in white that shows us in every cycle. In the last 2 cycles, we've seen roughly 1,100 days from the prior cycle all-time high to a break of that all-time high just before the next bull market, okay? 1,100 days. If we extrapolate that trend, that would mean Bitcoin would break all-time highs in around December this year, okay? Give or take, it could be a month earlier, it could be a month later, but around December this year. And more specifically, that definitely, basically guarantees a break of all-time highs after the halving, which means that if we break all-time highs before the halving, or, significantly before December or November this year, Bitcoin could be seen to be moving too fast as per this micro trend. And we have lines here that show us that the Bitcoin structure is pretty much the same in every cycle, right, on a larger scale. And this is where we go into the 4-year cycle, right? The 4-year cycle obviously, relies on there being, 4-year cycles. There's been 3 of them so far, and they all have similar structures, all have the same kind of bull market, same kind of bear market, same kind of accumulation period pre-halving. Okay, and what we see right now is there is a definitive part of the 4-year cycle, which is the pre-halving correction, okay? So we bottom out, we go upwards massively, we break the yellow dotted line, which is the bull market support line in every cycle. Within 2 months, we're at the yellow horizontal line in solid yellow. We reject from that line, we see a pre-halving correction, and then we go upwards from there and break all-time highs. This is the same structure we've seen on every single occasion, with the same kind of date range in relation to break of these yellow lines as well. So for example, we broke the dotted yellow line in 2016. It took 2 months to get to the yellow line for a rejection for the pre-halving correction. We saw the same thing in 2019. 2 months to get to the yellow solid line, rejected downwards from there. In this case, 2 months from the breakout to get to the yellow solid line, and realistically, if we're following the trend, we should be rejecting down from here. Now, not only is it based on price points, it's also based on RSI price points. So we've got a horizontal yellow line on the RSI, which matches the horizontal yellow line on the price chart and shows you that every single time we reject from the horizontal yellow line in the price chart, we reject from the same level exactly on the RSI. This is too big to be a coincidence. This is not just 2 separate data points. This is, almost 3 confirmed data points, with the 3rd data point in development, but very much following the trend of the 2 previous data points, showing, massive degrees of accuracy between cycles with not in the price chart, but also the RSI. So, what does this trend show us? It shows us that Bitcoin, if we're following this micro trend, we should reject downwards and see a pre-halving correction here. That's fundamentally what it's saying. And so obviously, if we do see the bullish price action continue, we do see Bitcoin break 49K definitively, especially on a monthly candle close, that would invalidate this trend, and that would maybe do some damage on the 4-year cycle. Here's what we're answering, right? We're answering this question now. If we do break to the upside here on Bitcoin, if we do go above 49K, if we do break above this yellow line without seeing our pre-halving correction, will that damage the 4-year cycle? And will it damage the prospects of Bitcoin seeing a regular bull market? Now, I'll premise this by saying it's very important that Bitcoin sees a regular bull market because we need predictability in order to make money. I say it time and time again. You do not make money in a financial market by the charts going up. You make money in a financial market by being able to predict the charts going up, okay? And predict when it's going to top out. Predict when the correction is going to come. Predict all these things. It's predictability that makes you money. I would rather have maximum degrees of predictability in a stock market that's slow moving rather than be in the dark completely in a crypto market that's fast moving, okay? It's predictability that makes you money. Without predictability, you can't make money, which means without trends, you can't make money because you can't predict where the price is going to go. And what this will do, if we do, for example, break this yellow line right now on Bitcoin, we can look at previous times where we have broken this yellow line and we can see that we broke this yellow line in 2016 and within a month, okay, within a month of price action, pretty much, right, a month and a half, we were breaking all-time highs on Bitcoin. The same thing happened in 2020. Within a month of breaking that yellow line, we were breaking all-time highs on Bitcoin. If we are following this micro trend, which we have no reason to dispute at this point in time, within a month or two of breaking this yellow line at 49K, we should be at all-time highs on Bitcoin, which means that if we break this yellow line now, we will be at all-time highs on Bitcoin around April this year, which will be about 6 or 7 months, maybe 8 months earlier than the cycle expects to be at all-time highs. Now, that could lead to damage, and I'll tell you why. The 4-year cycle wouldn't be invalidated, but the 4-year cycle is because the 4-year cycle is based on tops and bottoms. It's based on cyclical tops, bull market tops, and bear market bottoms. So you can't really say that the 4-year cycle would be invalidated if Bitcoin reaches all-time highs before the halving, or if Bitcoin reaches all-time highs before, say, July this year. But you can say that that would be invalidating one of the micro trends that is fundamental to building the security for the 4-year cycle. It would be a dent in the armor of the 4-year cycle. It would be the first sign we have ever seen on Bitcoin, ever, right? Since the first halving in 2012, that micro trends within the 4-year cycle can be invalidated, okay? And that could lead to a snowball effect in invalidation of other trends within the 4-year cycle. If we break this trend, who's to say we can't break other ones, is what I'm saying. So although breaking 49K on a monthly candle close now won't invalidate the 4-year cycle fully, it will certainly add to the argument that this cycle is different, and it will certainly add to the argument that the 4-year cycle won't play out perfectly like it's done in the past, because we're seeing micro trends start to collapse for the first time ever. So that's the point I'm making here. So no, Bitcoin breaking 49K would not necessarily do permanent damage, but it would not be an ideal situation at all, because realistically, in order to have maximum predictability in a financial market, we want to be maintaining trends, not breaking them. And breaking trends does not only help, damage us in the future, because it means that next cycle we can't predict a pre-halving correction because there'll be no trend to predict that from. But it also shows us that next cycle, like I said, we won't be able to predict what will happen in this part of the cycle, but it also shows us that these trends that are developing from cycle to cycle are not infallible like they have been seen to be in the past. Look, I'll tell you this right now. In the whole time Bitcoin's existed, since the first halving, the whole time the 4-year cycle's been around, there has never once been an invalidation of a micro trend. Not once has a micro trend been invalidated. They have only been built up, okay? And what I'm saying is, if we knock this trend down, if it gets invalidated, that will be a statement. It will show you that these trends are not infallible and they could break. And the fact that one of them's broken this cycle means that other ones could break this cycle as well. And it would show us that, hey, look, the 4-year cycle is actually not guaranteed to work this cycle. And we might be left in the dark to an extent in predicting where the top will be using regular methods of TA, which is going to be a lot harder. Okay, I just told you at the start of the video, like 90% of the reason, or maybe 80% of the reason, I was able to predict the 2021 November top within 12 hours and the 2022 November bottom within 3 days is because of the 4-year cycle. Because I knew for a fact, and it is a fact, this is a trend, right? I knew for a fact that that top was coming within this time period. All I had to do was look for the TA that would confirm that, and I was able to do that, and it was able to work very clearly. Without a macro trend, it's very difficult to predict major cyclical tops and bottoms without waiting for breaks of macro ranges and macro resistance zones, by which point you could be down 40% in your positions, okay? So the 4-year cycle is very important, and ideally, we don't want to be seeing any dents in its armor, but yes, 49k breakout on a monthly candle close would very much be the first dent in the 4-year cycle's armor, not necessarily causing permanent damage, but definitely opening up doors for the 4-year cycle to be invalidated in this cycle. And that's a risky game that we don't want to be playing. We want a perfectly regular cycle with maximum predictability. Let's hope that we get one. But at this point, it's under threat, and we need to consider that. We need to watch these short-term moves very closely. Ladies and gentlemen, thank you for watching. I hope you enjoyed, and I'll catch you in the next video.